From fear to success, embracing market volatility as a swing trader. In today's episode, we're going to dive deep into the mindset shifts required for swing traders to overcome fears and embrace market volatility. Welcome everybody to today's show. I'm pumped for this. And one of the reasons why I'm pumped for this is because of a note that I just got inside our private Discord. Well, one of our members that we've been coaching, Santo, started out as a part-time trader. He's still trading part-time, but today he posted some incredible gains, and not just like a gain of like, oh well, he made some great trades. The trades themselves were actually fantastic, but it was the way that he's shifted his mindset to embrace volatility, which is the topic of today's show. The trades, some of the trades that he did yesterday. Palantir. You know what? I don't want to just talk to you guys about these trades. Let me show you some of these trades here. So let's get the screen share going over here. Screen share. And all right, so here it is. Here's Palantir. And here it is over here on Instagram. Now, what Santo did was we were talking about an entry right above this high over here yesterday. Now, what Palantir did, if we come over to our intraday charts, it broke out, right? Or where is it? Was this yesterday? Yeah, no, it was actually right here. So it broke out, shook out, and then went. So market volatility, you could be scared out of a move like this and not attempt to re-enter. Kept it on his radar, re-entered as this thing bounced back, and because of that, because of his emotional control and embracing volatility, he is now up over 8% on this trade. So that is, it's one of many mindset shifts that traders need to make in order to perform well, consistently, continuously, and to acquire the skill sets needed for trading. Embracing market volatility is a big part of it, so that's why it's today's topic. So how can we overcome this fear of volatility if you're feeling afraid of volatility? Step one is understanding that volatility is a good thing. Volatility is a good thing. Volatility is what makes us money. And when volatility is working in our favor, it's making us money. The fear comes from when volatility works against us and all of a sudden we're in a trade and our profits are evaporated, right? Or even worse, we're in a trade, price gaps against us, and all of a sudden we're losing a lot more money than we anticipated, right? If that's a fear that you've had, let me know. Drop a comment, leave it in the chat, wherever you happen to be watching this. Let me know if that's something that you've experienced in the past, or perhaps you're experiencing this presently. All right, so volatility can work for us, volatility can work against us. The market moves in waves. Think of the market as a wave. The waves, they come in, they roll out. They come in, they roll out. So what we want to do is to understand that the market moves in waves and to enter in the low volatility environment, anticipating that volatility is going to spike up. That's what's going to give you that upside. That's what's going to create the asymmetric reward to risk. We've spoken about that too. We spoke about that yesterday, where we actually just saw a great example of it right at the top of the show over here on Palantir. The volatility comes in and then it can spike right back out in your favor. And you know what? When volatility drops and it creates that low risk entry point where the price action is contracting, that's what's going to allow you to get in. And if price moves the wrong way, then you're able to get out with just a tiny amount of risk. There's always going to be risk in trading. There's always going to be risk. We can't analyze away the risk. Without risk, there's no reward. What we want to do is create asymmetric reward, where you only need to risk this much in order to make this much, in the case of that Palantir trade. So, you're thinking of the market as waves. Volatility comes in, it goes out. Comes in, goes out. Enter on those small volatility levels to capture the much larger upside. Volatility is what's going to make you money when used well. It's just think of it like surfing, right? If you were going to the beach and you were surfing and the wave was coming in, that wouldn't be the time to go charge into the water. You wait for the wave to go back out, then you bring your surfboard, and then you go to catch the next wave. Think of the market in waves. Step 2. Now that your thinking is going on the right path, now you're starting your next step is going to be to learn about risk management, learn about position sizing. Because if you go in too heavy, you could get wiped out and capsized. Sticking with our beach analogy, it must be hot outside. I'm thinking about the beach. So if you go into the market too heavy, then you're just going to sink. Right? You're just going to sink. And even if you do happen to catch that wave, if it goes the wrong way, guess what? You're done. Your count is done. So what do you need to do? What do you need to do? You need to use the appropriate sizing for your trade. What's the appropriate sizing? I talk about a few methodologies in my book, The Trading Mind Wheel. There is a position size calculator that you could use for free on my website, marawealth.com. So go to marawealth.com and you'll be able to pull up this calculator. In fact, why don't I show you the calculator right now? I'm going to bring that up on the screen, marawealth.com, over here on links. So let's bring this back over here and share the screen. Right, so right up here in links, you go to position size calculator, and it pops right up. And so what you're going to be able to do with this is put in whatever capital you have. Right, well, whatever capital is in your account, you're going to put it there. Let's start with the round number, right? Let's put in 100,000 or a million, whatever. Round number. Easier to work with. You don't want to risk the whole thing. You just want to risk, say, 1%. 1% is even high. You might want to risk 0.5%. But when you're putting in your entry price, let's say that you wanted to enter in a certain stock at, 75. Right? 75. And let's say you've monitored this setup and you found the tight entry, the volatility has compressed, and now you're able to get in at 75, and your stop where you're going to cut this thing if it's wrong, let's say that it's all the way down 73. Right? Now you're able to take on a 37.5% position size, right? You're able to put 37.5% of your capital in this thing, right? Remember, this account started with $1 million. Your position size on this one trade is $375,000, but you're still only risking 1%. Let's say we wanted to be a little bit lighter. Let's say you wanted to only risk 0.5%. Well, now you're only risking 5,000 of the $1,000,000, right? It's not that much. This is going to tell you how many shares you could buy, the size of your overall position, what you're risking per share, all these key elements that you need. All these things to help keep your size at a reasonable level. And it's going to tell you down here, we've got this tool called the Trade Emotionator to help you understand if you're being overly aggressive, if you're being conservative, if you're being fearful, all these things. And this tool is free. Again, just go to MaraWealth.com and it's right up there in the links. Understanding position sizing and risk management is absolutely critical to your long-term success in the market. And when it comes to fear and volatility and learning how to manage those two, well, guess what? If you are sized appropriately and the market suddenly has a major volatility event, let's say the market crashes tomorrow, and you are sized appropriately, sure, it might sting, but you're not going to get killed. Right? That's the key. What position sizing well also allows you to do is to take advantage of the upside. Right? You might be sized too small. Same thing. Well, let's go back to our beach analogy. Let's say that you're sized way too small. Guess what? The tiniest wave that comes by is going to carry you out to sea. Hey, you're not going to be able to survive with just a tiny amount either. Let's say that you ride the giant wave and you have the best trade of your life, but you're sized this small. It's not going to have an impact on your portfolio. You want to have the impact to the upside, so you need to be sized appropriately, and the position size calculator that we just discussed will help you do that. So make sure that you go to MaraWealth.com and use the free position size calculator. That's why it's there. Okay, so we spoke about a lot of things already. We spoke about understanding that volatility is your friend, that used well, this is what's going to work in your favor. And we also spoke about risk management. We spoke about position sizing. And now I want to take some questions. Let's see, I see a couple of people here on Instagram have already posted some questions. This question here from Nurbay, and thank you, Nurbay, for using the little question bubble over there on Instagram. It makes it a lot easier for me to spot these questions. He says, why volatility is always the opposite whenever I get into a trade? Yeah, that used to happen to me too. And it used to feel that way, that, oh man, like I'm getting in at exactly the wrong time, exactly when the market is about to roll over. There's a couple of ways to work on this. Number one, if you haven't seen the multi-time frame analysis episode that we did yesterday, I would suggest going and watching that, because what that will help you do is to identify trends, not just on one time frame, but across time frames. What you want to do is to make sure that you are trading with the dominant trend. What's a dominant trend? Do you guys know? Tell me what the dominant trend is. Type into the chat, or if you're watching this somewhere else later on, type into the chat, let me know what the dominant trend is. How do you identify the dominant trend? The way that you identify the dominant trend is very simple. You go to the higher time frames and look for the trend. The higher time frames will always be dominant. Think of it like this. Your monthly time frames, right? I like to look at monthly charts, weekly charts, daily charts, and then I'll look at the intraday charts. And typically on the intraday charts, I will stick to the 30-minute time frame. Your monthly time frame, think of that as your giant cruise ship. Think of the weekly time frame as your yacht. Think of the daily time frame as a speedboat. Think of the intraday time frames as a jet ski, right? Each one of those are vessels that are moving through the water. Almost tipped over my coffee, make a big splash there. each one of those vessels are moving through the water. Each one will create waves. Your monthly charts are going to create much bigger waves. It's a much bigger time frame. It's also going to be a lot slower moving. Then you work your way down to the intraday. It'll make waves too. It's going to be impacted a lot more by the daily, the weekly, even the monthly time frames. So you want to have those moving in the same direction, and you want to look for confluences across time frames. That's how you're going to fine-tune your entries and your exits, and it's a topic that, again, we spoke about this quite a bit yesterday. It's something that I work with people on inside our elite program, and that's how Santo, if you missed that part, re-listen to that. Santo applied multi-time frame analysis when he went into Palantir, Adobe, Zscaler, and a number of others, and he's up 8% in a day. The stuff works. And the important thing about it too is that when you finally do understand trading, you're gaining a skill that's going to last you for the rest of your life. Right? So we're not just trying to make money on this one trade, although that's very nice. We're trying to build a skill that's going to last us for years, decades, skills that we could pass on to our kids. Right? Well, what are we doing here? What are we really doing here? We want to pass something on. What we're going to pass on is our wisdom and knowledge, and if this is a skill that we can use for the rest of our lives and share with other people. Question from 2208 Trader. How to find the right stop loss and target. Multi-time frame analysis. That's going to be the best way to find the right stop loss, the right entry. As far as the target goes, using multi-time frame analysis can help there as well. What I would also incorporate, and what I do incorporate as well, is understanding how far patterns that I'm interested in have historically gone. How far have they gone? I'm looking at patterns that are several weeks long, that have shown up in the best growth stocks throughout history. On average, these stocks tend to move about 20 to 25%, so that gives me a ballpark of where I'm looking at. But whenever we project, whenever we're looking at a target in that way, it's kind of fuzzy. You're not just going to say, okay, it's going there, and that's my wish list, and I'm going to get in and manage the trade based on that. What you're going to end up doing, a much better way to do it, is to exit based on your performance, to manage a trade based on your performance. In some markets, trades are going to move a lot further than 20%, like they are right now. But earlier this year, much different story, right? We were still in the bear market. It was still choppy as hell. So trades weren't going that far. If you waited for 25%, most of the time you're probably getting stuffed out at break even. Market conditions matter, and so does your past performance. And if you are disciplined and following rules, then your performance is going to give you some of the best insights that you can hope for in trading. What other questions you guys have? I see the like over there on what looks like Facebook. I appreciate it. Thank you. Make sure that you guys are sharing out the show. That's really, if you're enjoying any of this, that's the best way that you could say thanks. Just take the information and share it with somebody else. Like and subscribe and do all those kind of things. So that way the message goes further. Let's see, any other questions? We've got a couple more minutes here. Just scrolling through Instagram here. Already answered the question about targets. Suggest to me a good winning system. I talk about all this about the system that I use inside the Trading Mind Wheel. It's a system that I developed. It's called Eagle, and it's a system that is based off of what I've learned from William O'Neill, Mark Minervini, Nicholas Darvis, Jesse Livermore, Stan Weinstein, and that's the same path that I would recommend that everybody follow. It's not where, when I say that, I don't mean that you have to be a carbon copy of me. What I mean is that you're going to learn what works, right? That's the step number one. Learn what works and learn from somebody that's already done what you're trying to do. There's a lot of crap out there. That's one of the beauties and one of the drawbacks of the internet is that we get to learn so much and everything is at our fingertips and we have so much access. The downside is that there's a lot of crap out there and you need to sort through that. So start by finding somebody that has achieved what you want to achieve and then go learn from those people. I talk about my whole journey in the Trading Mind Wheel, and I share my methodology, Eagle. Basically, I'm looking for asymmetric reward to risk setups in the best growth stocks I can find, and I share the whole process in that book. I keep on hitting this coffee mug here. Yeah, Spider-Man is hanging on to the table. Anyhow, so I share everything in the book, and I share the mindsets and the position sizing. It's not just about the entries and the stops and where to get in, where to get out. Yeah, I share all that stuff too, but it's also the mindsets that go along with it and how we went about acquiring those. And that's really the most important thing because that's what's going to stick. The mindset component, how are you going to get the information to stick? That's what's in the book. How to improve our skills and knowledge? Same answer. Where can I get your mindset book? I'm in South Africa. The Trading Mind Wheel is available on Kindle. It's available as an audiobook on Audible and audiobooks. Barnes & Noble has it on their e-reader, so you could get electronic versions of this if it's not shipping to Africa yet. But thank you, I appreciate that. Let me know if you're able to find it that way. Vado, using supply on lower time frames. So you want to look for volume and range decline on whatever time frame it is that you are trading. When it comes to looking at price and volume, and I'll share the screen again momentarily. Just give me a second here to shift some stuff around. When you are looking for, when you're looking at price and volume, you want to look, the way that I'll do it, I'll start over here. This is a weekly chart. And I'm looking for high volume on the way up. And as price is consolidating, I want to see declining volume. That's exactly what Palantir gave us, PLTR. I'll also look for that over here on the daily time frames, right? High volume in, low volume consolidation. But then, right, to start to get surgical with some of this stuff, that's where you want to see the same thing, or at least a similar thing, down here on the intraday charts. And you do. You have this whole big volume, this price and volume run up. Look at those volume spikes on the way up. On the way down, right, while it's consolidating, yeah, you have a couple of spikes in there, but for the most part, volume is much lower. And that's an important point too. You want to make sure that you're looking at the bigger picture, and the bigger picture is you can look at the whole chart on the intraday time frames. You want to look at the whole thing, not just focus in on bar by bar by bar. You could do that. There's a time and a place to focus in bar by bar and do that kind of analysis, but you want to do it within the context of the overall picture, the bigger picture. Let's see, I might have time for one more question before I need to hop off. Yeah, Theodore, supply and demand. Yeah, so that answers that question there. All right, so the next episode is going to be on Friday at 11:30 a.m. Eastern Time. I'm still looking for topics, so if you have a topic that you want me to cover, send me a message. If you are over here on Instagram, send me a DM. If you're watching somewhere else, send me a DM. You could also go to marawealth.com, and my contact information is there. Just send me an email, and I will make whatever episodes that you guys want. I'll make them happen. Until then, enjoy the rest of your day. Take care. Much love. Peace out, everybody.